So has this ever happened to you? When you are in a trade, when you are in a trade and price goes in your favor, then out of nowhere, price takes you out. So what happened here is what you would call a last draw, which is your final sweep. Price quickly came down to take you out the profitable position before continuing in the correct direction. By the end of this lesson, you'll have no problem navigating this and also taking advantage of the final sweep. So when it comes to your final sweep, there's two major things you need to look into. First is the amount of liquidity taken. Second would be the speed. So what do I mean when I say how much liquidity has been taken? You can see we're in a downtrend. Price quickly shot up and came down, breaking two swings. So what happened here? Price took out two levels of liquidity. And when trading your final sweep, what you're looking for is a multi-level takedown. So to understand the concept of speed when it comes to your final sweep, you want to understand the basics of a candle flip. As you can see, you have a bearish candle here, but then it will quickly turn into a bullish candle. And whatever that bearish momentum was, it would end up as a wick. And this is really just the basics of a candle flip. Before you proceed, please make sure you hit the like button and leave a comment. This helps us continue making these free lessons. So when it comes to speed, what you would be looking for is for the entire final sweep to happen within one candle based on your operating time frame. So what you want to see is your candle start off bullish and flip into a bearish candle. And that entire bullish momentum being your wick. So let's take a look at this example. This final sweep took out three levels of liquidity. And our operating time range here is the 1 hour based on structure. So when you go into lower time frames, understand that we are operating in the 1 hour. So we want this entire move to complete within the 1 hour candle. This is the characteristics of a final sweep. So when you go into lower time frame, like in this case, the 5 minutes, this entire sweep happened within 5 minutes. And the candle quickly turned into a bearish candle. So again, this candle started off bullish and flipped into a bearish candle. And what you want to keep in mind is when you're entering a trade like this, you want the sweep to occur quickly. So if this sweep took 5 minutes to happen and price came back to the 1 hour candle open, which was right here, this was the 1 hour candle open. Price quickly took out all these levels of liquidity and the candle flipped. So you would enter the trade once the candle flips, once a price goes back to the 1 hour open. And what you want to see is you want to have a lot of time in your favor. So if you're waiting on a 1 hour candle, understand that you only spent 5 minutes of your 1 hour candle. You only spent 5 minutes. So you still have 55 minutes in your favor. And that's how you trade a final sweep. You got to have a lot of time in your favor. This entire sweep can take 45 minutes to happen and then the candle flips. Then you have no time for your trade to work or for your candle to flip successfully. So you want to make sure the ratio is right. You want to make sure the candle doesn't take a long time in perspective to what candle time frame you're looking at. And that's why the candle flipped, because the sweep only took 5 minutes. So let's take a look at this example. In this case, our operating time range is our 15 minutes. And if you want to learn more about operating time ranges, please make sure you visit our website and use code ETMARMY for 20% off. So understanding that our operating time frame is our 15 minutes, you want to mark your next candles open, which would be your previous candles closed. And what you're looking to see here is something like this. You would want to see the candle start off bearish, take out the multi-level liquidity and flip to be a bullish candle. So again, start off bearish, flip, bullish. And what is an important aspect is the speed. So time-wise, we want it to be less or around the quarter of the time frame that we're working on. So you want it to be way less than a half when it comes to your 15-minute time frame. Why? Because you want to give your trade more time to work. You want to have more time in your favor. The more time you have in your favor, the more than likely the flip will be successful. Now, if it takes you out of 15 minutes, if it takes you 8 minutes for the wick to be formed and then flip, then you're getting closer to the 50% mark where the flip might not be successful. But now let's say the liquidity sweep happens within the first, let's say anywhere between 3 to 5 minutes, then you will more than likely get a successful flip. So keep that in mind. So now let's go on the lower time frame, go on the 1 minute. Let's look at our sweep. We have 1 minute, 2 minute, 3 minutes, 4 minutes. And the flip occurred around 3 minutes and a half, which would be closer to the quarter, which is ideal. And obviously your stop loss is right here. What are you targeting? The next level of resistance. And you could also target the 15-minute close. So whenever the 15-minute candle closes, now you can go on the higher time frames and boom, your 15-minute candle completed right there. This will be your first TP. This will be your first TP. And you can still target this level. Is your highest level of rejection. Why is it our highest level of rejection? Because this is where price rejected in the prior candle. Let's take a look at this example. Our operating time frame is our 15-minute, and we have our next candle open marked up. So what are we waiting for? Again, you're waiting for a multi-liquidity sweep to occur and to flip within the early stages of the candle. So let's go on the lower time frame. We need minimum of 2 liquidity sweeps. 1 minute, price already cleared 1, 2, 3, 4, 5 levels of liquidity. Now, what do we need? We need for price to get to this area. Once price can get to this area, which is our candle open, we can take price to the upside. And price closed, went back to our previous candle close, which is our current candle open. So let's look at an example when your final sweep doesn't work. So what do we have here? We're on the 1 hour, and this is the previous 1 hour close, which would be our new candle open. And this is our levels of liquidity. So what are we waiting for? We're waiting for price open bearish, take out minimum of 2 levels, if not 3, and flip. So this is the 5 o'clock candle. Now let's go on the 1 minute time frame. And let's wait for our sweep and a candle flip. What happened here? Price took out 1 level and 2. So price took out 2 levels. So what are we waiting for now? We're waiting for price to get back to the candle open for a flip. The flip does not happen without price going back across our candle open. Common sense. So what time is it right now? 6:09. So look at the timing. Price, it's already 6:40, so 40 minutes then passed within our 1 hour candle, and price did not get back to our candle open. So even if price does now come back to the candle open, this will no longer be a valid trade. Why? Because now the time is not in our favor. There's not enough time for this candle to flip successfully. Let's play this candle out. And the candle closed. Let's go back on the 1 hour. the candle closed without ever revisiting that open. So to summarize this, basically what you need is your multi-level liquidity sweep, which could be these two levels, or it could take out even more. It could take out these other two levels. But what you need is a liquidity sweep. You mark out your candle open. Obviously, before all that, you want to make sure you're trading within the trend. You're trading in line with the trend. And you want to make sure you're on the right time frame. You need to make sure you pick out your operating time frame. And what you're waiting for is within the first half, preferably earlier, you would want the wick to occur and for the candle to flip. So again, if it's a 1 hour candle, you would want this wick, which is your final sweep, to occur within your first, let's say, 3 5-minute candles. For price to quickly rush back into the opening price. Because once price reaches the opening price, this is when the sell orders come in. The liquidity has already been grabbed, a multi-level liquidity has been grabbed, and now price is back at that opening. So now price has no option but to rip to the downside. And the probabilities are in your favor if the time is in your favor, if you still have enough time to work with it. Hope you guys enjoyed this lesson. Please make sure you like, share, and subscribe, and make sure you visit the website and use code ETM Army for 20% off.